Hi everyone, welcome back to my channel. I'm very excited to share with you what I have really digest or even understand after watching the recent Yahoo Finance interview with Ray Dalio. He's basically the billionaire investor and the founder of Bridgewater Associates. And this particular company, why I want to really hear what he has to say, right? Because his company that he has founded is actually managing a asset of close to 150 million as of beginning of this year. And this is the time where he really bring in a lot of his insights. In the particular interview is about what 30 over minutes. He talks about his past experience, one of the biggest so-called crisis for his fund or mistake that he have made in the 80s, right? Let him realize that when it comes to investment, there is things that he need to be aware of. And don't even say him, even Warren Buffett, I did a previous video like 1-2 weeks ago. I actually mentioned about Warren Buffett actually made a mistake in his portfolio due to what has happened in 2020. So to me, why I want to listen to him is because many of my friends or a lot of my good friends or even investors keep asking me which books should I be reading. I think one thing you want to understand, the macro environment around the world is very different comparing to some of the authors or some of the investors like 10, 20, or even 30 years ago. The main reason is because a lot of the finance textbooks, I mean, my background is in finance. The finance textbooks or back then, most of the interest rate environment is actually in positive environment, but today is very different. Most of the developed country bonds are in the negative zone. And that's why, other than reading books about investing, I think following this group of great investors will really help us to really understand how do they maneuver a big pot of money. Because I am pretty sure that the due diligence and the work that they put in is very unique, right? And I just want to remind everyone, and I think in the next about 1 or 2 months time, Warren will have his annual shareholder meeting. It's actually 2nd May, so do watch for the video that I'm going to do for you in maybe like one month plus. Okay, so let me get into it. Okay, so I think the first thing that the host, the interviewer actually asked him, what do he think about the stock market and the government stimulus that is happening during this period or even into 2020. So I'm going to put a chart over here to show you how much liquidity or stimulus the US government have imprinted. So if you look to the far right, you can see that on about March 2020, there was actually a very big spike. So it's a lot of money, right, that is being printed. And you can see that comparing to the gray zone all the way to that March 2020, the amount is quite similar. But if you look at the gray zone, right, it's like it took them about quite a good long period of time to reach that amount. Right, like maybe 4 to 5 years, but within a short period of like in March, it all the way shoot up to quite a similar level. So that's the amount of what he called liquidity that is given into the market. So it's basically US start creating a lot of bonds, and those bonds are created to really support the economy, right? So in the interview, he actually talks about that was why there was a V-shaped recovery. And this is something that I mentioned last year to all my investors, and obviously they benefited from it. Of course, what has happened has happened. Nothing we can do about it. But I think the interviewer is asking him like, hey, what's going to happen now? There's so much debt is being created, right? So that's why he said that there was too much liquidity, and that's why when there was so much printing of money, a lot of the money actually go into equity, which is the stock market. Why? Because think of it this way, the environment today is actually going into a negative zone. So US interest rate is about 0 to 25 basis point, which is all-time low, comparing it similarly to the last financial crisis in 2008-09. So there's so much printing of money, so that's why a lot of people are throwing money into the stock market, because that's normal. Why? Because when bondholder cannot find the yield, which is the interest from their bonds, what's going to happen is they're going to sell off the bonds. So when they sell off the bonds, what's going to happen? They're going to park their money in somewhere where they can make more money from it or gain more interest. That's the stock market itself. So I'm going to put another chart to show you the V-shaped recovery. So do you see that it coincides? So March 2020, there was a stimulus package, and then March 2020, the market created a V-shaped recovery. So both the charts are over there. But one thing Dalio actually said, right? He said that it's pretty crazy now, right, to want to hold cash or even bonds. And not just Dalio, even in my previous video about Warren Buffett, he actually said that bonds are definitely not the best place to invest in recent time due to low yield. So he even mentioned, as an investor, do consider reallocating your assets into higher yielding securities, which is the stock market. So why Dalio said it is very simple. So because of the creation of so much bonds and so much money in the system, what's going to happen? There will be inflation, right? So naturally, developed country inflation is about what, around 2, right? So there's a lot of speculation saying that, hey, it will be like going to 3%, 4%. The number doesn't really matter. So it means there will be sort of like a hyperinflation, because good inflation is about 2, hyper is like maybe above 2 or even 3 that stage. But I'm going to put another chart over here. For the last 10 years, right, inflation has always been around less than 2%. Only 2 period that is slightly higher, but throughout the last 10 years, it is not above 2%. But this time now, because of so much money printing or so much creation of money, we might be expecting overshoot in terms of inflation. And based on, I think, last week FOMC, which is a Fed meeting, they actually said that they don't mind inflation to go above 2%. So they are not in the hurry to bring down inflation. So to bring down inflation is to really increase interest rate, right? They are not in the hurry, and based on the report stated in their research, right, they actually say that in the next few years, okay, this is something that my own investor will get it. So I will probably say about it, but if you want the screenshot, do get back to me, because I only want to send very valuable information on how will an investor like myself manage my money and get information that is not readily available in the market eyes. Okay, so do reach out to me. So the last thing has always been 2%. So to me, it was like unlikely inflation will overshoot, but obviously we need to watch it. But the thing is, why inflation is so, if it's too high, what's going to happen is your money is going to be very weak, right? Your money is going to be very weak. Your cash will be sort of cashless or become trash. Because last year, Ray Dalio also mentioned that if you are holding cash, it is actually trash. Okay. Yes, why? Because if you have put money in March 2022 until now, you probably made a very decent amount of returns, and precisely from the chart that I showed you in the video previously, right? Then the ending that I want to conclude is that Ray Dalio was talking about the two rising power at this moment, which is China, that is rising, and of course is trying to compete with US. Okay, and US is the #1 position. There's many research about in the next 10 years or even 7 years, as China is going to overcome US. I don't know. Okay, let's not guess. But to me, is yes or no. I think both are cases that we want to position our investments. And at the same time, Warren Buffett also mentioned this year in the annual letter, actually said that their unwavering conclusion is to never bet against US. So this is the same message as of last year annual general meeting, right? So they also mentioned this forwards, basically never bet against US. So precisely this is what is happening. I think I just gotten news that I think Biden is not going to release or to reduce the tariff against China. I mean, more data will come out, but we will not know. See how the news being translated or being released to the public, okay, or even to the information that I'm getting, okay, from my sources in a sense. So I hope that you ask me more questions and start conversation like this with me. Do comment below in my chat group, and likewise do like, share my video, follow my channel, turn on the notification bell, and subscribe to my channel. Right, really support me in this journey, because I think according to Ray Dalio, over time when he bring in more investors and become more savvier over time, he wants individuals to challenge his thinking process. So that's why I'm actually recording this video. Why? Because I want you to comment and ask me questions. Right? Ask me questions so that my future videos I can try to address them, or even text me. Okay, so I hope all is good. Support me in my journey, and I'd love to have conversation with you. Goodbye.